We're no longer in the AI experimentation phase. We're in the infrastructure and commercialization phase. Enterprises and governments are deploying AI at scale, which means massive demand for data platforms, cloud computing, cybersecurity, and the physical power and cooling systems that keep it all running. This convergence is creating winners across the stack. Not every AI stock will survive, but the ones solving real bottleneck software platforms, cloud infrastructure, threat protection, and data center enablement are seeing explosive adoption. Let's dive into 4 high-conviction names that stand out in 2026. Stock number 1. Palantir. We start with Palantir Technologies, the company that's gone from controversial defense contractor to one of the hottest commercial AI platforms on the planet. Palantir builds sophisticated data analytics and AI platforms primarily through their artificial intelligence platform. They help organizations integrate massive, messy datasets and turn them into actionable intelligence using AI. Think Gotham for government and Foundry for commercial enterprises. In Q1 2026, Palantir delivered stunning results. Revenue hit $1.633 billion, up 85% year-over-year, their highest growth rate as a public company. U.S. revenue surged 104%, with U.S. commercial revenue exploding 133%. They raised full-year 2026 guidance to approximately 71% growth, well ahead of prior expectations. Why does Palantir matter so much right now? Because AI isn't useful without clean, governed data connected to real-world operations. Palantir's platforms solve that integration problem better than anyone else. Boot camps and rapid deployment are driving commercial acceleration, especially in the U.S. Major catalysts include accelerating commercial wins, expanding government contracts, and the network effect of more customers feeding better AI outcomes. Their competitive moat comes from deep domain expertise, a culture of mission-driven engineering, and platforms that are incredibly sticky once deployed. Switching costs are high. Long-term potential. If Palantir continues converting hype into repeatable software revenue, they have the ingredients for a true multi-year compounder. This is a company transitioning from high-growth disruptor to enterprise AI standard. From software platforms making AI usable, we move to the cloud giant actually delivering the compute. Stock number 2. Google Alphabet. Google's parent company is often overlooked in pure AI conversations because of its size, but that's a mistake. They're executing at a high level across multiple AI fronts. Google operates the world's leading search engine, YouTube, and one of the top cloud platforms while investing heavily in foundational AI research through Google DeepMind. In 2026, Google Cloud continues its strong momentum as enterprises shift AI workloads to the cloud. While exact Q1 numbers show steady double-digit growth in cloud with improving profitability, the real story is Gemini model adoption, AI infrastructure investments, and integration across products. Why Google matters in 2026 and beyond: they have unmatched distribution through search and YouTube, vast amounts of proprietary data, and the ability to monetize AI at scale. Cloud is becoming a true growth engine with better margins. Catalysts include Gemini advancements, AI overviews in search driving engagement, and enterprise cloud deals. Regulatory wins or clarity would also unlock value. Long-term investment potential. Google offers a compelling mix of growth and value at its scale. Investors get exposure to multiple AI winners, foundational models, cloud, consumer AI, with a fortress balance sheet. It's a lower volatility way to play the AI megatrend with significant upside if cloud and AI monetization accelerate. But building and running AI creates enormous security challenges. Stock number 3. CrowdStrike. That brings us to CrowdStrike, the cybersecurity leader turning AI threats into opportunity. CrowdStrike delivers a cloud-native endpoint protection platform that uses AI and behavioral analysis to stop breaches in real time. They've evolved into a full-spectrum cybersecurity platform covering endpoints, cloud, identity, and more. In fiscal 2026 reporting periods, CrowdStrike has shown solid growth with revenue around $1.3–1.4 billion per quarter in recent prints, maintaining strong net new ARR and high teens to low 20s% growth while expanding margins. They're positioning heavily as the security layer for AI workloads. As AI adoption explodes, so do attack surfaces. AI agents, models, and infrastructure need specialized protection. CrowdStrike's platform is becoming mission-critical for secure AI transformation. Catalysts include module adoption, AI-native security features like Falcon 8, and partnerships with major cloud and AI players. Long-term potential, excellent. Cybersecurity spending is secular, and AI is a tailwind, not a headwind. CrowdStrike is well-positioned to grow into a $10 billion+ revenue company with best-in-class margins. Finally, none of this AI progress happens without the physical infrastructure. Stock number 4. Vertiv. Vertiv is the critical enabler providing power, cooling, and thermal management systems for data centers, especially the high-density AI ones. They design and manufacture everything from uninterruptible power supplies to liquid cooling solutions that keep thousands of power-hungry GPUs from melting. In Q1 2026, Vertiv reported net sales of $2.65 billion, up 30% year-over-year, with the Americas region growing 44% organically on AI data center demand. They've raised guidance multiple times, reflecting strong backlog and visibility. Why Vertiv matters: AI racks are getting extremely dense. Traditional air cooling isn't enough. Liquid cooling and advanced power systems are becoming mandatory. Vertiv is at the forefront with end-to-end solutions and partnerships with hyperscalers and NVIDIA. Continued hyperscale builds, liquid cooling adoption ramp, and geographic expansion. Backlog remains robust. Long-term investment potential, very strong for a multi-year horizon. As long as AI infrastructure build-out continues, Vertiv should see elevated growth and margin expansion. It's a pure play on the physical side of the digital revolution. Palantir is making AI operational. Google is powering and distributing it. CrowdStrike is securing it. Vertiv is keeping the lights on and the servers cool. These 4 stocks represent different layers of the AI economy, each with strong moats and accelerating demand in 2026. The opportunity is massive, but remember, valuations matter, and patience is required. Do your own research, consider diversification, and size positions according to your risk tolerance. The AI build-out is still in early innings. If you liked this analysis, drop your favorite AI infrastructure or software stock in the comments. Like, subscribe, and I'll see you in the next deep dive.